And, imagine watching the Middle East step back from the absolute brink of a regional war over the weekend, only to see Wall Street wake up on Monday morning and, well, seemingly care more about a single tech company's massive bond sale.
Yeah, if you were trying to read the tea leaves last week, it probably felt like a really chaotic tug of war.
Oh, completely. But today, the market didn't just give us a signal, it gave us an absolute roar. We are looking at a massive, historic risk-on victory for today, Monday, June 15, 2026. U.S. equities didn't just climb, they surged to aggressive new highs.
They really did. It was something to watch.
Yeah, the S&P 500 Catch Index closed up 1.7%, landing at 7554.29.
Yeah.
And the NASDAQ, it posted a massive 900-plus point surge in its futures to close at 30,830.75.
Which is, it's the kind of tape that forces everyone to just sit back, exhale, and really reevaluate their entire portfolio. What we are witnessing is a profound recalibration of risk across the board.
Right. So in this deep dive, we're going to break down exactly what fueled this fire. We'll unpack the historic U.S.-Iran ceasefire finalized early the weekend, look at Nvidia's staggering $25 billion bond sale that kept the AI engine roaring, and explore exactly why localized military skirmishes couldn't even put a dent in today's tech euphoria.
Exactly. But before we get into all those mechanics, we need to make it explicitly clear that this show is for market context and discussion only.
Right. It is not personal investment advice or an investment recommendation. Keep that in mind.
Right.
Okay, so let's jump right in. Session 1. What set the stage before the U.S. session? Because, this is where the foundation for today's massive rally was actually poured. If you were looking at your portfolio last week, you probably felt that tense macro backdrop. On one side, coming out of last week, the U.S. economy remained really resilient, but
we had that massive energy supply shock.
Exactly, keeping inflation stubbornly high. You might remember the prior weekend's tension, where that unexpected Israeli strike in Beirut temporarily stalled the draft peace framework. It genuinely felt like the whole geopolitical landscape was balancing on a knife's edge.
It did, and that tension was heavily priced into the markets. But then came the main event. On Sunday, June 14th at 4 p.m. Eastern Time, the U.S. and Iran finalized a historic ceasefire and nuclear agreement.
Wow.
Yeah, and the market didn't have to wait months for the physical reality of that deal to take shape either. Shortly after the ink dried, at 5:33 p.m. Eastern Time, President Trump formally authorized the immediate lifting of the U.S. naval blockade.
Meaning they officially reopened the Strait of Hormuz.
Exactly.
Which is just massive. And I think this is where a lot of retail investors get tripped up. People watch the news, they see the Middle Eastern conflict, and they react as if they're watching a hurricane hit the coast.
Right, treating it like an unpredictable natural disaster.
Exactly. You just brace for it and hope your portfolio survives.
Right. Which is an incredibly common reflex, but, I think it's entirely the wrong framework for understanding global markets. We really need to look at this through a game theoretic lens.
How so?
Well, what we experienced over the preceding weeks wasn't random chaos. It was simply geopolitical brinkmanship as bargaining leverage. Both sides were applying maximum pressure specifically to extract the best possible terms at the negotiating table.
Ah, I see.
Yeah, and once that leverage was exhausted, it reached its logical game-theoretic conclusion in a formalized memorandum. The posturing stops, and the ships start moving.
And the market absolutely loves when that risk premium evaporates. With the Strait reopening, we are suddenly unblocking roughly 1/5 of global petroleum. So the immediate market reaction was obvious, right? WTI crude cooled off to an 81.16 close.
Right.
But I have to push back a little here. Is this whole energy relief narrative just a bit too neat?
What do you mean?
Well, because the ink might be dry, but Israel and Hezbollah actively defied the pact. They clashed early Monday morning at 1:38 a.m. Eastern Time. And that briefly spiked gold to 4391.50 before it faded. Doesn't that suggest the underlying risk isn't totally gone?
No, that is a vital point, and it's why we can't just declare victory and ignore the nuance. The European Central Bank actually agrees the relief isn't absolute.
Oh, really?
Yeah. Shortly after those clashes, at 1:56 a.m. Eastern Time, ECB President Lagarde and Joachim Nagel came out and warned that second-round inflation effects from the energy shock are still a very real threat.
Right, because it takes months for physical oil supply chains to actually normalize.
Exactly. And that means discount rates as financial gravity remain a baseline reality that investors must operate against. If energy shocks have already baked inflation into the system, central banks can't just slash rates to zero.
That gravity stays heavy. So, wrapping up session one, this geopolitical relief valve definitely set a bullish tone for the open, but those inflation concerns are still lurking in the background. We're going to take a quick break, and when we come back, we'll dive right into the tech explosion that took over the tape today.
Sounds good.
All right, welcome back. Let's move to session two. What moved markets during U.S. trading hours? Because while the weekend cleared the geopolitical runway, big tech just sprinted right down it.
Sprinting might actually be an understatement. The tech sector fully took the baton today, Monday morning at 8:14 a.m. Eastern Time, so just before the U.S. Open Nvidia launched an investment-grade bond sale.
Right.
And they originally targeted $20 billion. But the demand from investors was so ravenous, hitting $85 billion, that they upsized it to $25 billion.
$25 billion. It's almost an incomprehensible amount of capital to raise in a single morning.
It is, but the fundamental logic driving this is crucial. This perfectly illustrates AI CapEx as a cycle-agnostic arms race. The capital markets are indiscriminately funding the $700 billion big tech infrastructure build-out.
They don't care about the high interest rates.
Exactly. They just want the infrastructure built.
But let me play devil's advocate for a second. When I see a company that is essentially minting cash, deciding to absorb $25 billion in debt, is this massive debt absorption a sign of health, or is it a vulnerability?
Oh.
Because we've talked before about mega CapEx as market fragility mask. Equities are fundamentally supported by real cash generation, sure, but valuations are entirely reliant on flawless execution.
That's a fair concern. The multiples are tight. But to counter that fragility argument, you really have to look at the concrete physical infrastructure evidence coming out during the trading session today.
Okay, what happened?
Well, at 11:02 a.m. Eastern Time, Google committed $1.5 billion to expand an Alabama data center campus. And here's the thing. They are using nuclear power from TVA and Kairos.
Wait, actual nuclear reactors?
Yes, because this addresses the core physical reality of the build-out. Power access is the AI bottleneck. You can have all the GPUs in the world, but if you can't plug them in, they are useless.
Right.
So the capital markets fund Nvidia, Nvidia supplies Google, and Google uses that hardware to spin up dedicated nuclear reactors to power it all.
That is just wild when you map it out. And the market impact of that realization was undeniable today. The tech ETF, XLK, closed at 191.79. And what's crazy is that credit spreads remained incredibly insulated. High yield, the HYG ETF, closed at 80.04. Investment grade LQD closed at 108.99. That shows deep, deep confidence in corporate cash flows from the bond market.
Completely. So just wrapping up session two, the U.S. trading hours were completely dominated by this tech-driven surge, validated by a credit market that didn't even blink at the new debt.
All right, let's take one more short break, and then we'll hit the closing bell.
See you in a minute.
And we are back. Session 3. Corporate events recap and what to watch next. Because this tech euphoria wasn't just confined to Nvidia or Google today.
No, it wasn't. We saw a massive corporate milestone that occurred just before the U.S. session, actually, at 1:44 a.m. Eastern Time. SpaceX made its NASDAQ debut.
Finally.
Yeah, and it jumped 20% on its first day to reach a $2.1 trillion valuation.
Meaning Elon Musk is officially the world's first trillionaire.
Exactly. And you have to frame this as a massive sentiment boost for the broader communications and tech sectors. XLC finished at 112.19.
It validates the idea that we're in an era of trillion-dollar infrastructure leaps. But it wasn't all just green lights today. We did have a regulatory headwind developing during U.S. hours. Right.
We did. At 10:51 a.m. Eastern Time, Anthropic executives met with the U.S. Commerce Department. And this was regarding risks that their latest Mythos and Fable AI models could potentially be diverted to foreign military intelligence operations.
Right, tying back to the prior session's background where the government blocked foreign access to Anthropic's top models.
Exactly. It's a reminder that government intervention remains a ceiling on global AI commercialization. It's the ultimate speed limit on this arms race.
Well, folks, it seems the only thing flowing faster than oil out of the newly opened Strait of Hormuz is cash into Nvidia's bond offerings. With the Middle East cooling down and the S&P 500 heating up, even the VIX decided to take a much-needed vacation today, closing down at 16.20.
Right.
It's a historic session where SpaceX makes Elon Musk a trillionaire, and the rest of us just feel like one when checking our brokerage apps. Let's hope tomorrow's tape stays as toll-free as the newly unblocked shipping lanes.
I think we all hope that.
So what should we watch for next?
Previewing the upcoming 24 hours, on Tuesday, June 16th at 8:30 a.m. Eastern Time, keep an eye on the May Import Price Index, May housing starts, and May building permits.
Excellent. Well, Vyuan, thank you so much for joining us on this deep dive.
Yes, please drop a comment below and let us know your thoughts on how you're playing this market shift.